today's fast-evolving and uncertain global economy, end-to-end lifecycle asset management has become an imperative for asset-intensive organizations. More than ever, organizations must deploy asset strategies that reduce risks and uncertainty in business operations while increasing revenue through optimal asset operational performance. To better illustrate how the Cosmo 360-degree simulation digital twin platform helps organizations to effectively address these challenges, we will take as an example an industrial plant relying mainly on two categories of robots, the welding robots and the handling robots. TOTEX, or total expenditure, is directly impacted by the reliability of these industrial robots, their functional components, and the way they are aging, as well as the associated risk of failure. In fact, if you wait too long to replace assets, the downtime costs caused by the functional components, such as obsolete electronics cards, will put your production at risk. The Cosmo 360-degree simulation digital twin platform leverages IT, OT, and ET operational asset data from different sources to replicate all the applicable resources that constrain the feasibility of an OpEx-CapEx plan, dynamically simulate the consequences of these failures, master their cascading effects, and build a robust overall risk assessment framework. Once instantiated with the relevant customized asset data, the Azure Digital Twin Model Graph provides an end-to-end visibility of the entire system and its subsystems. The digital twin dynamically simulates the whole asset network and the associated obsolescence effect. Cosmotech Asset gives asset managers the possibility to design and simulate unlimited what-if predictions related to the asset lifecycle in order to optimize key metrics as well as the overall asset maintenance and risk strategy. These scenarios will consider all key parameters such as replacement policies defined by asset age thresholds or asset failures for different time horizons. In this case, it is from 1 year to 30 years. In this example, the what-if scenarios simulate various electronic card stock levels with 1, 2, 3, 5, and 8 electronic cards, and analyze the various conflicts arising for each value of the electronic card stock as well as their impact on these KPIs. You can then use the various dashboards available related to OpEx, CapEx, and downtime costs, operation and task analysis, spare part stock, and a detailed analysis of failures to get a very granular understanding of the simulation results. For the scenario with only one electronic card in stock, the chart displays several scheduling conflicts, such as an insufficient electronic card stock level at the moment when the electronic card failure occurs. Here, the scheduling conflicts arise during the first 8 years before the obsolete electronic cards are replaced. You can see here that when the stock quantity is higher, the annual average spare part usage is well under the alert stock threshold, resulting in an important reduction of asset downtime and associated costs. The sensitivity analysis feature provides deeper insights into the resources and variables having the most impact on the simulated results. For example, several scenarios based on various robot age replacement thresholds can be run. The comparative view of the simulated scenarios clearly displays what the optimal CapEx allocation strategy for a particular time horizon would be. Here, the optimal strategy that considers both the optimal level of investment and the downtime costs tells you that you need to replace the handling robots once they reach 15 years of operation and the welding robots once they reach 17 years of operation.